All right, good morning, everybody. Mike Anderson here with American Independent Marketing, joined by longtime contemporary Eben Marsh, the LTC sales manager for LifeSecure. Apologize for the technical issue that we had getting things started, but we are ready to roll. As is always the case with our webinars, we've got everybody on lecture mode, which means that we have you muted so that we can get a good quality recording, which we will be uploading that to the website later today, so you can circle back around while the webinar is going on, and we will take time for questions at the end. While the webinar is underway, you can key anything pressing that you've got in there. We'll get it taken care of. Before we get started here, important to note that LifeSecure's product's not available in New York, not available in California, which we had on the invitation. Sometimes that information gets missed, but we just want to be clear for everybody with that. Going forward, I would say a fair amount of experience on this call. Eben's been doing and involved with long-term care for 25 years. I've been doing this since the mid-'80s, so you got some folks here that have done a lot and seen a lot. Eben's going to talk about both the opportunity with LTCI Worksite and the great solution that LifeSecure's got available. We had some tremendous success with this in Washington back during the payroll tax days, and we want to make sure that you all are aware of what that opportunity is and what you can do with it. So with that, I'm going to quit jabbering. I'm going to turn it over to you and let you take it away, Eben. Thank you.
Super. Thank you, Mike. Welcome, everybody. Just for folks that may not be familiar with LifeSecure, we've been in the long-term care business since 2006. We are a wholly owned subsidiary of Blue Cross Blue Shield out of Michigan. They are an A-rated carrier. So we've got some experience in the marketplace. Our focus has been in worksite and worksite sales, and I think that's where there's a super opportunity, particularly in the small business marketplace. And so that'll be sort of some of the things I run you through today. As far as contact information, you can see my ugly mug here. That's how you get a hold of me. I'll pull this back up at the end also. Sue Root is my contemporary. She's been with LifeSecure, 15 years or so. She handles a lot of the quotes, some of the internal workings, can assist in directing people relative to list billing, that type of thing. We've also obviously have a customer support line too, that can assist with appointments and licensing and all that good stuff. So just footnote that information here. But as far as where I think there is a huge opportunity is in the small business market. What we're not doing here at LifeSecure is elephant hunting. We're not looking for those 1,000, 2,000, 3,000 employee companies. Those operations typically have a benefits broker, and you can get in there and do a heck of a lot of work, and the benefits broker shows up and says, well, we can do that. Smaller businesses, you can just, I think these numbers are super conservative here, but you know, there's 16 million businesses under 500 employees. Where I think there's a super niche really is that under 200. Again, they're probably not going to have a benefits broker there. Okay, more than likely, they're probably going to be in some type of S corp, some type of pass-through entity, and we'll sort of separate out the deductions real quick for C corporations versus the S corporations. So there are a lot of folks out there who, you know, what types of businesses should you be focusing on? Obviously, white collar, gray collar, highly paid individuals, you know, that can include your accountants, engineers, insurance folks for that matter, medical. Those are going to be super opportunities. I think also those closely held family operations, they're looking to try to get something back from their business. As a business owner at one time, you know, I was always searching for whatever tax deduction I could get in order to bring that back to my business. So some things to sort of keep in mind. a lot of you folks may be on some type of lead program, maybe a referral. You're getting referrals where you're typically sitting down with a couple. What I encourage folks to do is ask those people, you're talking to them already about how they can deduct their premiums. Ask them if they're business owners, okay? Let's turn that opportunity, instead of just selling that couple, to let's talk about how we can, through the business, take the associated tax deduction, and now we move from maybe 2 cases to 10 cases. And we'll talk a little bit about how we qualify for our simplified underwriting program a couple of slides down here. But just a quick review of tax deductions. Again, most of you may be familiar with this. None of us provide tax advice. We always refer individuals to their accountants, et cetera, for that type of information, but we can give them the basic sort of outlines. Of course, the cleanest tax deduction is for those S corporations. All those premiums, whether they've funded a piece of it or the entire premium, are going to be 100% business deduction. In these smaller operations, the 200 and below, I think generally you're going to find that those are some type of S corp, whether it be an LLC, LLP, some type of pass-through entity. Okay. There are still deductions available. So for those owners, you can see these are age-banded premiums. They're going to increase as we age. They're also typically graduated for inflation. So the feds come out with a new tax deductibility guidelines every year. So you can see here, there's still some pretty sizable deductions that can be taken for that S corporation. Again, what can I get back from my business? Okay. Also, if that operation happens to have some type of HSA, health savings account, we can pay our premiums and refund ourselves, again, subject to these age-banded maximums. So again, as the older we get, the larger reimbursement we could take. Long-term care insurance is defined as a medical expense, therefore it can be paid for with those HSA premiums. And again, a great way to take advantage of that HSA if you've got that type of setup at your client's operation. So what's in it for the employer? You know, for the most part, we're going to go through the minimum requirements for funding for those cases that are under 100 employees. I'll define these out in more detail. But really, for minimal expense, we can put together a pretty decent looking program that's not going to be super expensive. You know, relative to their health insurance, it's going to be very, very inexpensive. This is sort of a classic way to assist in retaining, recruiting. By far, you know, sort of where we've got the most traction is those executive carve-outs, where we go in, we define a management class, we set those folks up, they apply, they'll get the simplified underwriting if they meet the requirements that we're covered. But those executive carve-outs are key. Keep in mind, our product is traditional long-term care. So you're going to hear, particularly in some of those larger operations, larger businesses, where they're using a life insurance product that somehow accelerates those benefits for long-term care. And having spent 3 or 4 years in personal production, you know, I'd have that discussion with people, and some folks would say, listen, I want to cover the long-term care exposure. I don't want any more life insurance. I've got enough. This is a super opportunity to bring to the table. And again, I would just reinforce that there are none of the other individually platformed long-term care carriers that will offer simplified underwriting. So we have certainly carved out a niche from that standpoint. Under that simplified underwriting procedure, there is a 7-question application. Okay, we do look at RX and MBI, okay? Generally speaking, we do not order medical records. What that affords us is the ability to make those underwriting decisions much quicker. Again, I have sat waiting 35, 45 days for individual coverage to get applied. Of course, you're not getting paid premiums until that case, commissions until that case has been approved. We did a sort of an internal audit from January 22nd through 24. We're making a business decision in 2 days. We pay commissions weekly. Again, let's go from that scenario where we might just be writing the couple and take that conversation to, hey, this is a great way to reward fairly inexpensively your sort of key employees. We can also stack spousal discounts, okay? So there's a 10% spouse discount. Under the scenario where we're going to require employer contributions, that's typically going to be for operations that are under 100 employees. There's an additional 5% discount. So we can stack those discounts. Again, you can't typically do that with those life insurance-based contracts out there. And we work off of unisex ratings. Anybody that has sat down with a couple, identical benefits, same age, you know that with individual coverage, you're going to pay typically 60% more for the female premium. They have a higher risk of needing long-term care and for longer periods of time. So that's baked into the way we have our rates set up here. Okay. How do we qualify for simplified underwriting? Footnote here that if your group is larger than 100, they can go fully voluntary. Okay, so that doesn't require any type of employer contribution. I've got to, at a minimum, get 10 eligible employees. And where we sort of sweeten the pot here a little bit is if you've got 5 employees and you can also get to their spouses or partners and they apply, you've met your 10 eligible employees, you qualify for simplified underwriting, okay? For those groups under 100 employees, we are going to require some minimal funding. That can be $25 a month, or we can pick a benefit pool, and we'll get into the benefit pools a couple slides down here. If for some reason you can't get to the 10 submitted applications, you can go through full underwriting. In that scenario, we would only need 5 applications. Again, spouses and partners are going to assist you in meeting that 5 lives. Okay. Full underwriting, 2 additional questions. So you've got a maximum of 9 questions in that scenario. We will require a PHI. Okay. Again, generally speaking, unless it's a real sort of complicated underwriting scenario, we're not going to be reaching out and grabbing those medical records. We're fairly comfortable with what we receive from RX and MIB in that scenario. So we're going to turn around those applications quicker. Okay. Generally speaking, we allow, once we enroll a group, there's a 90-day window where folks can qualify if they meet those parameters, the simplified underwriting. I encourage you, when you're working with that employer, let's make it a 60-day window. If you're like most people, you're going to sort of wait till the last minute to do this, and all of a sudden all these applications are coming at the last minute. This sort of forces people's feet to the fire, if you will. In that scenario, you're still going to have, if you've got some stragglers, you're still going to have a 30-day window to submit for simplified underwriting, okay? Any current employees who miss that 90-day window will have to go through full underwriting, okay? Any new hires, once they become benefit eligible, that 90-day window also applies, okay? So we get cases where new applications are coming in, particularly operations that are hiring on a regular basis, and those folks are going to be eligible for that simplified underwriting. Okay. Just a quick review of underwriting. We are obviously pricing off of the age of the applicant, just like any traditional long-term care. There is a height and weight chart too that we include in all our marketing materials. Okay, it's super liberal, like most of the height and weight charts out there. Okay, we are going to ask for medications, as I said earlier, MIB, RX. Okay, any scenarios where they check yes to questions 1 through 7. Okay, it's the application, because this is all done online. We're tech heavy company, one of really the first traditional long-term care carriers to do pretty much everything online. In fact, we don't accept, on rare occasions, accept a paper application. Okay, that allows us some economies of scale. That also, you essentially cannot advance through that application process if you haven't filled the stuff out correctly. And then, of course, we're going to require that the applicant sign that. As far as issue ages, we have coverage available all the way down to 18. Okay, this can work for, again, for those folks that are younger. You know, you may have some 40-year-olds out there that can't get individual coverage, or 30-year-olds that are highly actualized. They understand this. They may have gone through this with grandma or mom or dad, whatever the case may be. Okay, the simplified underwriting will, and I'll expand on this a couple slides down, up to age 65, and there's some requirements relative to being actively at work. This is guaranteed renewable coverage, just like traditional long-term care. As long as you continue to pay that premium, the carrier cannot cancel that policy. That said, that does give the carrier, if they file with the insurance commissioner in that state, the ability to raise rates. On our current offering, our LTC 3 product, which has been around for, I think we rolled this out in 16, before my time. We have not had any rate increases on that product. Again, applications, we're pricing that at their current age. We do not save age, okay? So if you've got somebody that's coming up on 65, let's get them written while they're still 64, because we will not backdate. That's how we've got the product priced. I think one of the sort of overarching themes that are super important about Worksite is keeping it simple. If you've got, it's tough to put a traditional long-term care plan in with all the riders that are available if you don't sort of streamline these things down. You've only got people for so long when they sit down and fill out that application. We've made it super simple here. We've got basically 4 different banks. You can see there are some variations down below there in given states. So that $50,000 bank is going to translate out to $1,000 monthly. You can see how that works along the line here. Okay, all the way up to $6,000. We do have a cash alternative benefit too. I'll talk about that in a little bit more detail. Another option that I mentioned earlier, when we, in those scenarios, we've got groups under 100 where we need some type of employer contribution, they can pick a bank here, okay? And maybe they pick the 50,000 for one set of employees and the 200,000 for the senior executives. Again, they have the ability to sort of slice and dice that any way they want. Again, keeping it super simple. We'll talk about, there are inflation options too. One of the downsides of those life with an extension rider for LTC is typically those plans do not have any type of inflation protection. So we've got options for inflation protection. We'll talk about that. This plan does reimburse, like most traditional long-term care plans, on a monthly basis, okay? but we'll also give you the option to tap into our cash alternative benefit. That means we can take 30% of whatever our monthly benefit is at the time of claim in pure cash, okay? We're not requiring that care be provided by licensed individuals. This can be used to reimburse family members. If they want to tap into the cash alternative this month, but have more expenses because they've got, let's say, a home health aid coming in, certainly you'd want to tap in under the reimbursement side of the contract. So again, we'll reimburse all the way up to the monthly maximums. Other standard features built into the plan, like most traditional plans, there is a benefit for home modifications. These are your grab bars. It might include a wheelchair ramp. Those can be used and tapped into while you're actually accessing either the reimbursement side of the contract or that handy cash alternative benefit. Standard 90-day elimination period. Again, the idea here is we're not giving you a ton of options here to confuse that per 90-day elimination period. I'm sure Mike will tell you that 98% of the policies that they're selling are 90-day elimination periods. There is a little caveat here where we would go to first day coverage, okay? If this was triggered by some type of accidental injury, excuse me, or a stroke, okay? Obviously, there has to be an expectation, like all tax qualified long-term care policies, that event is going to last longer than 90 days. So in that scenario where I fall down, I break my arm, but I'm going to be healed in a couple of weeks, that's a claim that we're not going to approve. It's stroke in particular. There are a lot of associated issues relative to strokes and therapy, et cetera, et cetera. Waiver of premium, of course, is going to kick in the day that we start to receive benefits under the insurance coverage. That, generally speaking, is pretty in most traditional policies. Inflation protection. So again, keeping this simple, we got a 1%, 3%, 5% compound interest, okay? That 1% can come in handy. There are, I think, about a dozen states right now that will allow your policies to qualify for the partnership for long-term care, assuming your state has that. Most states do at this stage, where you could opt for 1% inflation protection and still qualify for that asset disregard on the back end here. The one rider we do have is a non-forfeiture benefit. Quite frankly, we don't sell a ton of it, but it does require that policy be enforced for at least 3 years. And if you were to lapse your policy, you basically would have a paid up policy. Again, just to reinforce the size groups that are going to qualify us for that simplified underwriting. For groups that are larger than 100, okay, that can be fully voluntary offering. We've got to meet the minimum of 10 submitted applications. Again, spouses in that scenario or partners are going to qualify. Under 100, same deal. We need 10 applications submitted. Minimal, again, I say minimal, $25 a month per employee, okay? Or you can pick a benefit bank. That tends to work. Tends to be a little bit easier to handle it that way. Again, completely up to your client and the advice that you provide for them. If for some reason you can't get to that 10 employees, but you can get 5, okay, we can go with a full underwriting scenario. That's gonna add 2 additional questions, as I mentioned earlier, so that a total of 9 questions. MIB, RX. There will also be a phone history interview required. Right? That's a way to sort of, if you can't get to the 10, again, those closely held smaller operations, we're still going to get that application turned around significantly quicker because generally speaking, we're not looking at medical records. That's, as all of you know that have been in the business, that's what takes that adds a lot of time to the underwriting. There is a actively at work requirement of 20 hours, okay? That applies to spouses also, okay? We will take, for simplified underwriting, those cases up to 65. If you're the day before they hit 65, let's get that application in there. Simplified under will apply up for those spouses or partners to age 49. Again, they have to be employees, not not contractors. That's not going to apply in that scenario. So just a couple of things to keep in mind, but a lot of the contracts out there, particularly in those with the life riders, are going to require 30 hours. We're only requiring 20. All right, this is like sort of joke, my top 10 list here. Reasons to consider LifeSecure product. Again, we're keeping the platform as simple as possible. I'm going to show you, we've got several portals, a portal where an employee can go in directly and fill out their application. There's also a portal where you as the agent can get in there and assist the client. That may work well if you're trying to work with them buy-ups, maybe the employer covered sort of the base, but this individual wants to buy up. You probably might want to be on there to assist them through that process. Cash alternative benefit, again, remember, no requirement that those folks be through licensed operation. That can be family members. We will reimburse up to 30% of their monthly benefit. That 1% compound inflation rider can come in handy in those states that do allow that for the appropriate inflation. Remember, we always have to make an offer of 5% compound. All tax qualified plans do require that. Most people don't buy it because it's super expensive. Okay. Waiver of premium, of course, is going to kick in once we start to access benefits under the contract. There's that 0-day, first day coverage in scenarios where there's that accidental injury or stroke. Again, got to be an expectation longer than 90 days. Home modifications included in the contract up to that monthly maximum, okay? Simplified underwriting, again, this is the way, quite frankly, to probably get some cases through that may not go through a scenario where there are medical records. There's no guarantees of that. This is not a dumping ground for those cases that got declined through traditional coverage, but it may afford you in certain instances to get something approved that you couldn't. Okay. Stacking of discounts, 10% spouse partner discounts. Again, if there's employer contribution, that's additional 5%. We're working off of unisex ratings, as I mentioned. Turning those cases around, business decision in 2 days. We pay weekly commissions. Okay. So again, those are things that are super, I think, important. Again, after spending 2 or 3 years of personal production, you spend a lot of time getting that case in. Let's get paid on it quickly. As far as, again, all of our applications are taken online. Okay, we'll make some type of accommodation if somebody doesn't have access to a computer. I think most of the folks that we're talking to certainly have access to computers. Okay, so there's a site where the employee can go in on their own, or there's a site available where you can assist as the agent. It's completely up to you, however you want to do it. That application is not going to allow you to advance if you've made a mistake. If you've checked yes to one of the knockout questions, it will not allow you to advance. again, it sort of becomes, it assures that we get those cases, those applications in that are super clean, and our underwriters can get to doing what they do, underwriting. We've got some great marketing materials available. As most of you folks, this product, people need education on long-term care. It's not like signing up for term insurance. Okay, people need to understand the associated risk. We've got a ton of marketing materials that are approved for your use. Those come in the format of emails. These are all things that you can use if you work with that HR department, and you really need to get that HR department's buy-in here to assist you in educating folks. Otherwise, you know, some folks are just, they don't understand the risk associated. We're going to provide you with a ton of tools here to assist you in that educational process. Okay. We have also got flyers, posters, whatever you need. These are all available. They're all approved for use with consumers. Okay, so we've jumped through the hoops, and there'll be certain variations from state to state depending on the insurance department, what they approve and what they don't approve. But they'll all be marked and associated with the state that you may be marketing. You may have employers also that have folks in multiple states. Okay, we can work with you in those scenarios. Obviously, if we don't have product there, we're not going to include that in any of the census gathering. Again, more marketing materials available for you. This is a great piece here, the plan at a glance. It just sort of takes you through, how do I qualify for simplified underwriting? What are our benefit banks here? What inflation protections? What is the cash alternative benefit? It's sort of your little cheat sheet, if you will, for lack of a better explanation. I would just add here too, I work specifically on the long-term care side. That's my background. We do have other offerings. I refer to them as ancillary benefits. I've got a group right now that has some younger folks. Along with the long-term care, they want to add accident insurance because they think that some of the younger folks might be interested in that. We have those available on both a worksite setup as well as individual. If that's something that interests you, contact me. I'll steer you to the right folks for that. So that's not a side of the business that I support. I'm certainly working here on the worksite. So I would, at this stage, I don't know, Mike, if you have anything in the chat, but I would open that up to any questions, however you want to do it. I don't know if you're going to unmute or just work out of the chat box. I'll let you handle.
Well, let's start with the chat box. So we got one here. When an employee is approved for policy and they leave the employer after 10 years, are they allowed to take the policy with them? The answer to that question, yes. I know that one. I've dealt with it before. They're going to notify. Usually, it's important. Usually, what'll happen is the employee or employer, if they're doing payroll deduction, they get the bill. They can line them off. They can also direct that particular employee to go to their policyholder portal, notify the carrier, give them new information as far as mailing address and such, if that's appropriate. Also give them new information that allows them to pay the policy direct to the carrier. So portability is crucial. It's one of the great things that differentiates this from a lot of other things that are out there. So I am now going to go ahead and unmute everybody. Again, we always ask as we do this that if you've got anything going on in the background, go ahead and individually mute yourself. That way, again, we don't get when the Amazon guy shows up with your deliveries for the day, or dogs barking, whatever it is that's going on out there in the way of commerce, soap operas, tea kettles, whistling, etc. That we get that taken care of. So let's see here. I'm going to unmute everybody. It looks like most everybody is individually muted, and we do appreciate that. Along the way, I'm going to take a quick second and do a little PSA for the next webinar we've got coming up. It's next week. As always, it's 9 o'clock Pacific time. Long-term care made simple, in-depth look at nationwide Care Matters 2, which is a really, really slick product in that hybrid space. Kenesha Catrone will be running that webinar for us. You'll see information on that later this week. If it's one that you're ready to get signed up for now, when we do the follow-up calls later today, we can take care of that for you. So, all right, let's hop back in here. And all right, we got the one question handled. Doesn't look like anybody else is jumping in. Most everybody has stayed self-muted. We appreciate that. And give it one last opportunity for questions. Eben, as always, I appreciate you making your time available. It would have been great if Sue could have joined us, but she's busy working and doing all the behind the curtain stuff for everybody. So they're asking if there is a business owner specific presentation. Eben? Well, Eben got himself muted somehow, so I'm going to see if I can get that resolved. There we go. Eben, question about a business owner presentation.
I was going to say there's certainly some pieces of this that one could pull from that. It's a super good question, and it's actually a great idea.
It does have a problem, which is it's got to get approved by the individual states. Anything that's consumer facing, they have to approve, and that usually bogs it down. A lot of times agents just go rogue. I'm not advising you to do that. I'm just telling you what occurs. Agents go rogue, do what they need to do to be prepared to do a presentation. And as Eben said, some of the material in this presentation, some of the other stuff that you've got available certainly would allow you to build something substantial. State availability chart is available on the website. We can get it out to everybody as part of the post-webinar package as well. I think the only ones that are really any great concern, California, New York, Florida, Indiana. I think that's the proverbial big four.
Right, exactly.
Yeah. So, three of which we had covered before. Indiana is one of the original 4 states, and for whatever reason, they've elected not to go forward there. So,
well, just a little bit of info that I gained from ILTC last week. There is a new insurance commissioner in Indiana who is much more business savvy and open. I made a connection there. I'm also driving as hard as I can to get something approved in California. It's a huge market. Again, anybody that knows about filing a product in California, it's typically takes a long time. There's a ton of objections. That said, I might have some additional information on both those states. New York and Florida are not going to happen anytime soon, unfortunately.
Yes, understood. Still plenty of opportunity. If you were successful getting California going, that, needless to say, will be significant, particularly in light of them still dancing around the payroll tax initiative there. So, okay, well, it looks like that is it. We appreciate everybody with the question. Appreciate everybody making their time available. We know there's a lot of things going on and everybody's really, really busy. So with that, we're going to go ahead and wrap things up. Members of the marketing team here will be in touch later today with follow-up. If you want to move forward with it, it's important to note that one of the compliance issues that we deal with is the inability to generate proposals for agents until we have them appropriately licensed, certified, CE checked off, et cetera, to keep the internal folks at LifeSecure happy with that. It's actually a part of the contract that you initially engage in with the carrier that you have the appropriate licensure and certification to be able to do that. So we can't get the cart in front of the horse. That means you can't get the cart in front of the horse either, but we'll be glad to get you taken care of moving forward with that. So Mr. Marsh, appreciate your time. We'll be reconvening somewhere down the road and take another look at a different spectrum or piece of the spectrum with this for everybody. And with that, we're going to go ahead and wrap it up. Thanks, folks. We'll talk to you later.